Welcome to Daily Digests for August 11th, 2026. U.S. stock index futures are trading in a narrow band today as Wall Street prepares for tomorrow morning's July Consumer Price Index report. Trading desks across JPMorgan and Goldman Sachs have mapped out binary market scenarios, ranging from a breakout past 7,900 on the S&P 500 to a systematic sell trigger at 7,430, while technical support holds firm around SPY 760. Today, we analyze the institutional inflation blueprints, Palantir's blowout commercial AI growth, historical yield extremes in dividend blue chips, and the shift into physical AI infrastructure. JPMorgan's trading desk assigns a 40% probability to its base case scenario, a monthly core CPI reading between 0.20 and 0.25%. If realized, JPMorgan expects an immediate S&P 500 gain of 0.25 to 0.75%, pushing the index toward the major 7,900 call wall resistance. Option positioning remains tightly clustered near current levels, meaning even a modest downside surprise in inflation could trigger a rapid gamma squeeze into positive market territory. Goldman Sachs models an even cooler print, forecasting July core CPI at 0.19% month-over-month and 2.47% year-over-year. Declining retail gasoline prices are expected to provide a drag on headline inflation, helping offset lingering stickiness in supercore services. Institutional analysts note that if shelter cost disinflation continues to filter through official statistics, bond yields could decline sharply, uncoiling equities across rate-sensitive sectors. Turning to equity technicals, SPY is testing key anchored volume-weighted average price support near 760. Technical analysts highlight this level as a critical line in the sand following recent market consolidation. Meanwhile, Nomura models show that systematic trend-following funds, or CTAs, maintain a major sell trigger near 7,430 on the S&P 500, marking the downside threshold where automated degrossing would accelerate. Looking across the broader market, the NASDAQ 100 ETF, QQQ, is holding support near 705. Price action over the past two sessions represents the narrowest two-day trading range of the year, reflecting low option-implied volatility as traders avoid taking unhedged directional bets immediately before the 8:30 a.m. Eastern inflation release tomorrow. Moving to corporate earnings, Palantir Technologies delivered another standout quarterly performance. Total Q2 2026 revenue surged 93% year-over-year to $1.935 billion, outperforming consensus estimates. Growth was anchored by Palantir's U.S. commercial division, which accelerated 149% year-over-year to $764 million, demonstrating that enterprise AI spending is generating real recurring software revenue. Palantir's operational efficiency pushed its Rule of 40 score to a remarkable 155%. Management highlighted accelerating demand for its artificial intelligence platform, or AIP, as corporate clients move rapidly from experimental pilots to full enterprise deployment. CEO Alex Karp also noted that sovereign AI initiatives are expanding as sovereign entities seek dedicated platforms to maintain strict control over internal data security. In valuation trends, dividend growth blue chips are experiencing significant multiple compression. Accenture is currently offering a forward dividend yield of 3.66%, placing it in the 98th percentile of its 10-year historical yield range. While corporate IT consulting budgets have seen temporary selectivity, the historical yield premium reflects an attractive valuation entry point for long-term investors. Similar historical yield extremes are visible across consumer staples and retail. Nike is trading at a 3.9% dividend yield, its highest historical percentile since 1985, following extended margin pressures. Meanwhile, PepsiCo's yield has risen to 4.3%, near its 10-year high, opening a wide valuation gap against Coca-Cola, which trades near historically tight yield levels. Looking at broader AI investment dynamics, market focus is expanding beyond semiconductor chips into hard physical infrastructure. Industry estimates project up to $10 trillion in cumulative capex required across power generation, grid transmission, and data center facilities over the coming decade. Private capital is increasingly stepping in to fund baseload energy projects, including nuclear power partnerships, to meet massive compute power requirements. To support these massive infrastructure demands, novel private credit structures are emerging. Institutional lenders are forming specialized financing vehicles backed by transferable compute capacity as collateral. By using high-demand GPU clusters and data center leases to secure debt, major technology firms are reducing reliance on traditional bank credit lines while continuing to expand compute capacity. On the macroeconomic front, recent labor market revisions add context to Federal Reserve policy expectations. Downward revisions to prior monthly payrolls and modest upticks in unemployment indicate that labor tightness is moderating. Economists note that while the Fed's neutral interest rate has shifted higher, easing inflation and cooling labor data keep September rate cut expectations firmly intact. To recap, Wall Street enters tomorrow's July CPI release tightly coiled. The immediate market path hinges on whether core CPI lands near Goldman's 0.19% estimate or tests JPMorgan's breakout parameters. Watch SPY 760 and QQQ 705 as key technical pivot points ahead of the 8:30 a.m. Eastern report. Thank you for tuning in to Daily Digests, and we will update you as tomorrow's inflation numbers break.